Good afternoon. I'm here in my office on a Saturday, and I just wanted to cut a short video. This is for the Fair Credit Reporting Act. Credit damage is part of my practice. And there's some very important information that consumers need to know, uh, given right now that a lot of consumers are approaching banks and mortgage lenders and car lenders, and they're asking for forbearance agreements. And now, what a forbearance is, remember, a forbearance is the bank or the lender is not forgiving your payments. What they're doing is they're saying in May, June, and July of 2020, you don't have to pay them, but at the end of your at the end of your term for that particular loan, they'll tack on 3 months that you have to pay then. So really what they're doing is they're forgiving the loan at this moment, but they're taking those same 2, 3, 4, 5 payments, they're tacking them on at the end. Okay. Now, what happens in forbearance agreements a lot of times is that people enter in the forbearance agreement, and during the period of forbearance, they believe that there's not supposed to be any negative credit reporting because they're not making payments, but they have a forbearance agreement. This should be true, but this is something you absolutely have to clarify and get in writing with your bank or your lender. If you have a forbearance agreement with the bank, with the mortgage company, with a car loan company, something like that, and you want to ensure that there's going to be no credit reporting during the forbearance period, let's just say May, June, and July of 2020, that there should be no credit reporting during the forbearance period because you're not going to be making payments, but you have a forbearance agreement with the lender. You have to get an email confirmation from the bank or the lender that there's not going to be any negative or false credit reporting or derogatory credit reporting against you for the forbearance period. If you don't have that, sometimes the lender goes ahead and reports you as if you're not making your payments, even though you have a forbearance agreement. Everyone thinks, they pick up the phone and they call the customer service at the bank, and that's good enough for the forbearance agreement. Sometimes it is, sometimes it's not. Whatever, it's all right to pick up the phone, but whatever agreement you have with your bank or your lender, get it in writing. If they won't give you a written confirmation that there's going to be no negative credit reporting, you need to send an email to them. Whoever you're talking to, mjones@bankofamerica.com, whatever, get their email address, send them an email that same day and say, this is to confirm our conversation of 10:15 this morning where you said that I have a 3-month forbearance on my loan, but you're not going to be doing any full credit reporting against me for not making payments during those 3 months. Get it in writing. If they don't give it to you in writing, you send it to them in writing. And then, of course, the email has to say something like, if this is incorrect, I want you to write back right away and tell me it's incorrect because I'll call you again and I'll straighten it out. So there is no false or negative credit reporting against me during the forbearance period. Now, of course, once you have written evidence that they agreed not to do credit reporting against you during the forbearance period or not to do derogatory credit reporting against you during the forbearance period, and they do, then you need to dispute with the credit bureaus, send a copy of whatever written confirmation from the bank or that the email that you prepared, send it to the credit bureaus, dispute with the credit bureaus in writing, give them 30 days. If they don't correct it, you've got a Fair Credit Reporting Act case and one that can make you some good money. Anyway, that's June 20th. It's the first day of summer here. It's a beautiful day in Los Angeles. Wherever it is you're listening to this, I hope you are enjoying it as well. Take care.